All right, so this is part two of this conversation on using self-directed IRAs as an investment tool specifically to invest in real estate. Now, what I was mentioning when we stopped that last conversation was how investment clubs can use self-directed IRAs um, to just do major league. I'm talking about y'all could do some major big things together if y'all had an investment group or investment club together, and you guys all had self-directed IRAs, and you guys all had individual retirement accounts, or I should just say you have all undergone the financial planning process and you have the appropriate accounts that you need to achieve your goals. And your goals included real estate investing, starting a business of some sort, whatever it is. Y'all can all do that by pooling your resources in your investment club and having your accounts outside that help to support the club. And specifically, we were mentioning self-directed IRAs for the members of the investment club. So you guys in the club can all use the self-directed IRAs to fund the investments that the club is in. And remember, y'all only need to do that to come up with the down payment. So you wanted to get, if all of you had $100,000 in your self-directed IRAs, then you could use the 100,000 as the down payment on, let's say all 10 of y'all had the 100,000, so all 10 of y'all have got $1 million. So y'all use that $1 million to put that as the down payment on an investment property. So you're going to get a bigger ass property, right, than what you just used. So then you're even going to hard money lenders or other crowd funds or other individuals with self-directed IRAs or other private lenders, all resources that we can find to loan you the rest of the money that you're going to need. So, and again, I mentioned before, an ideal scenario would be you guys all put in your 100 G's, that's the down payment, and then you get a hard money lender to give you the interest only loan for the property, and somehow you guys add value, into that property to increase it. When I say add value, y'all improve the kitchens and the bathrooms, and so instead of renting for a G, now they rent for $1,500. So that just added value. So if y'all bought a 10-unit building, and this may occur over time because it's currently only one or two of the units are vacant. So as units become vacant, y'all refurbish the unit. And so instead of renting for a G, they rent for $1,500. So that that extra 500 times 10, that's 5 G's more that y'all just was bringing in over and above whatever it was, whether the income that it was generating already. So y'all added value. That income value, specifically on multi-unit properties, is what increases the value of the property. So your equity is increased by the increase that you bring, that you can create in rents. So that's how commercial properties, they don't go up the same way single family residents go up in value. Appreciate, that's the word I'm saying go up, but you understand appreciation of real estate is that appreciation calculation is different for multifamily properties than it is for single family residence. All right. So that's just a little side note on investment groups and how they can utilize these self-directed IRAs. Well, moving on, um, we're gonna just move on. So with self-directed IRA, you as the account owner are in control of keeping your money working for you, and so that is important. So in a self-directed IRA, you are the account owner, so it's up to you. So that's like it's not nobody at the firm that is saying, hey, you need to put your money in this stock instead of that stock. Nah, it's it don't work like that. This is an account, and an account requires action. So you got to be doing something. You got to be about wanting to do something. You can hire somebody like me to hold your hand through it all, but it's going to be hard for you to hire somebody and say, all right, here, I got the account, make it rain, make me rich. Nah, because it requires your ingenuity. Listen to the title of it, self-directed IRA. So it's not possible for you to just, open the account and say, all right, what should I do? I mean, you could do that. I could tell you what to do, but this type of account is for somebody who is out there doing stuff. Somebody who is about it. You can't just be sitting on the sidelines with no self-directed IRA. For one, it costs more to have this account type. So you got to be doing something in this account type, or you just wasting your money. You just paying for an account that you don't even need. So you need to have something in it. So that something needs to be some property, a house, a business. So you could put a lot of stuff, man. The list is long. And but it requires you to be doing something. You got to be actively and doing some investing. And so that's why I'm saying self-directed. If you are somebody who's out there getting properties and that's your goal, you need this, bro. You need to get with it. If you didn't know, now you know. And so you need to contact me and learn some more, because this is the lick. It's how you're going to come up. All right. You could even, another one of my bullets, you can even have a checkbook for this type of IRA. And this is great if you are a real estate investor and you need to take action and on deals quickly and efficiently. Because remember, this thing about real estate is that, especially when it comes to investing in real estate, multi-unit properties, it's all about who can uncover the deal, who can find these hidden gems, and not just who can find the gem, but who is quickest to react, because the market is going to reach equilibrium as fast as possible. What the hell are you talking about, T-Roy? That means so the market is open information. Everybody got the same info. And so when I say it's going to reach equilibrium, that means the market. So let's just in your vision, just have a picture of 1 million people, just 1 million people all doing like this at the same time on the lookout. And so it's a deal right there. So the whole 1 million heads is going like this. Oh, it's a deal over there? I could invest $1 and make $2? Everybody's going to run to that deal. So pretty quickly, that deal is going to get snatched up. And so you need to be able to react quickly, because the quickest one to the deal is the one who's going to make the money. So having a checkbook allows you to do that. So a checkbook from your IRA, from your self-directed IRA, that's a valuable tool. So when they saying, all right, well, we need some, make a bid on it right now. Then you gotta, we need 5Gs. You gotta make five. Sometimes on some of these deals, they're not even listening to you until you make a deposit of 5Gs. Open escrow. You gotta do that, or you can't even bid. I have that scenario right now. I had to give them 3Gs just to bid on the property today. Actually, it ain't today. They sent me the email yesterday. I e-doc signed to put the bid on all these. I put a list and put a bid on that one, that one, that one, that one, that one, that one, that one. I'm lowballing them fools. So you want 500? I give you 440. I'm lowballing them. Somebody gonna be hurting and gonna bite. That's what I want. I don't want to buy it at the market rate. I'm looking to hurt some food. Give it to me for nothing. That's what I want. So what's next to nothing? Whatever your thing next to nothing that you'll take. You said you want 500,000. So I want to get it closer to nothing than that 500. So I'm gonna test you. Let's start at 400. Oh, they insulted, right? Oh, I'm insulted by that. All right, well, what's it gonna cost? All right, give me 440. All right, bam. So I took. All right, we ain't even talk about that. We talking about self-directed IRAs right now. So IRA money is sitting idly in people's accounts, in regular IRAs, all across America. Regular, traditional, individual retirement accounts have money sitting in them. And so you, as a real estate investor, you're always looking for money. Do you have a shortage of potential projects or a shortage of money? I bet you it's a shortage of money. Well, if you was to tap into IRA money, you no longer have a shortage of money. So if you had 10 people in your circle, they don't have to be in your circle right now. I'm talking about find them. 10 people that are now aware of you. They know that you're a real estate investor. Well, then they need you. 10 people who got self-directed IRAs. They looking for people like you because they're going to make that 8%, 12%, or 15% that I mentioned earlier. That percentage is the amount of points that hard money lenders receive on their money. So the money right now sitting idle in IRAs, if you're a real estate investor and you hungry and you bout it, go out there and find you some people with self-directed IRAs. And then you're going to say to me, well, how am I going to do that? How am I supposed to know that people, they're not going to tell me what type of account they got? How am I going to know who's got the self-directed IRAs out here? I don't know, but here go one way. So the answer ain't I don't know. Any which way you can find out. I don't know. Look on the internet, man. You can find out anything. You got to use your brain. But here goes one way. All right, go to meetup.com and whatever city you in, and punch it up that you're looking for it. A group that's involved with self-directed IRAs. It's gonna be one in your town. All right, you say, oh man, T-Roy, man, you don't know what you're talking about, man. There ain't no self-directed IRA groups around here in my town, my city, in my area. All right, look up hard money lenders. It's a group of hard money lenders. It's a group of real estate investors. It's a group with people who want to learn to be real estate investors. All of the above. What I'm trying to tell you is there are meetup groups with people who are real estate investors. Go to the group and say, hey, I'm looking for people who are who have self-directed IRAs, who use their self-directed IRAs for real estate investing. And it's going to be 5 or 6 of them that's going to say, oh yeah, I do that. Oh yeah. And they're going to say, oh yeah, you're going to network with them. They're going to hip you to more people who are doing that. They're going to tell you how they got hip to this. And then you're going to network with them on that. So, well, I'm just trying to point out there are a lot of ways to find out, and that's an excellent way. Go to a meetup group and find out. That's the answer. Go to a meetup group and find out where they at and find out who they are. And, meetup groups for self-directed IRAs, meetup groups for real estate investors, meetup groups for multifamily property investors, meetup groups for mobile home park investors, meetup groups for all that. Meetup groups that have something to do with crowdfunding, meetup groups that have something to do with peer-to-peer lending, meetup groups that have something to do with what's that? It's another term for peer-to-peer lending that I'm finding now, and they're calling it I'm forgetting what they're calling it now. It was peer-to-peer lending, now it's marketplace lending. So, these key terms, that's what I'm saying, trying to say, look up the key terms and find those key terms. Find meetup groups that mention those key terms and go to their meetups and talk to them. You're going to find some of them there. That's what's up. Send me an email. Shit, I might help you. You got to pay me $1 or something. I got to help. I'm going to help you do something. But send me an email. I'll give you some insight. If you can't find them, I'll help you find them. All right. So the fact is that millions and millions of IRA dollars are just sitting around looking for something to invest in. And that's just IRA money. Self-directed IRA money it's millions and millions and millions and millions of dollars just sitting in self-directed IRAs. So if it's in regular traditional IRAs, then you might have to convince them, say, hey, you got 200 G's in your IRA, in your 401k, just sitting over there doing nothing. How about you roll some of them over into a self-directed IRA and invest in my real estate project? I got this house over here that I'm flipping. I've got a bargain and I just need X amount. I'll give you 8% return on the money you loan me. 12 months, I'm going to give you 8%. They're going to be like, what? Okay. 12 months, interest only payment. The person who loans you that money is getting their money up front. They getting it in the points. You paying them the points. And then they're going to look, I just got a message popped up from a client. All right. So then they got, so they're going to be looking for places to invest that money. And so you just need to help them with the knowledge and information, even of how to do that. And when I mentioned in part 1 of this video, I mentioned that you need the right team on your side as an investor. And that's because you need the professional. For one, you need someone like me who can open this account for you. And so 2, you need somebody after they open an account who you need a real estate agent, who knows about investment property and knows about, how to work with this account type, and on and on and on. You need the hard money lenders. You need, you need the escrow. And then let me tell you a little trick on that as well. With the accounts that I can get you, these self-directed IRAs, I'm plugged into the custodian that at this custodian, they also help me if you wanted to hold cryptocurrencies in your self-directed IRAs, we can do that as well. Well, a byproduct of that is that those transactions are occurring on a blockchain, and we can do escrow using blockchain. So we can handle the escrow within your account as well. That's a whole nother, this is just a unique feature, you know what I'm saying? But it's not something we have to utilize, and it's something that I am not 100% um, I like to know things frontwards and backwards before I utilize it. So I haven't utilized blockchain escrow. I understand it, but it's like I don't know the forms and stuff. Like how, what's actually taking place, and how am I going to? How is that? How is that a benefit to me and my client? I fundamentally understand it, but it's new, and I'm a little bit uncomfortable with it right now. So I'm learning that as well, and I'm gonna bring that to you because I know it's gonna be a major benefit. We finna you. That's another holy grail thing. We finna take that and run with it. Escrow on blockchain. You don't understand the importance of that. I do. That's big. That's major. We finna put that in effect. Once I understand it and thoroughly, I'm like, yeah, give me that. We finna put that to work on things that don't even got nothing to do with you just fixing and flipping. That's just this much of it. We finna you put that in a major league, and that's gonna be a cost savings that's finna help us on these deals. All right, moving on. Moving on. All right, I'm gonna talk a little bit about investing in notes within your IRAs. Investing with your self-directed IRA using notes as the vehicle is possibly the most easy method. And when I say investing in notes, I'm talking about that scenario of basically you're just buying in on it. So that's with these companies like Lending Club is one that comes to mind that I know most about. Right, Lending Club is a platform that allows you to basically you are now a lender by participating in a loan. So the loan might be $100 million loan. How much of it do you want? How much you want in on? So the loan might pay 8%, and you only need to have your money in there for 12 months. So understand what that's saying. Here, let me back up. What's the key word that you know? Stocks and bonds, right? So you hear about stocks all the time. I think you've taken plenty classes, and you've heard from plenty professionals online telling you about how to invest in the stock market. But what they don't tell you is how they don't say stocks and bonds. They're going to tell you how to pick a stock and buy. But what about bonds, right? How do you invest in bonds? All right, well, usually bonds is the safe play, right? So when we hear about stocks and bonds, there's that ratio of conservative versus aggressive. So you will hear as you advance in age or advance towards you get closer to retirement, your ratio of investing in stocks and bonds must shift, because you should be more in bonds as you are closer to retirement to protect your assets from the volatility of the stock market. Stock market is doing this, right? So what is up, down, is up, down, is up, down. And your age, right, is growing. So down here, you say you're 30 years old and you're going right up here, you're at retirement, which is, let's say, 67. So you 30. The market is doing this here, right? So by the time you get to 67, it could be down. Remember? So look, up and down, up and down. You was 66, is up, right? You like happy. Okay, now I'm gonna retire next year. I'm gonna be balling. 67, the market is down. That's why they say I hate saying they. So they is me in this scenario. So investment professionals say you should move your assets into more conservative investments, because you cannot withstand the volatility of the market. So put more of your assets in bonds since you're approaching retirement. Stocks and bonds. That's why bonds are important. However, remember from previous conversations, there is always a risk-reward trade-off. So since bonds carry less risk, they also offer less reward. So you are more likely to receive returns of about 3%, 4%, 5% if you're lucky right about now on bonds, right? I don't even know if you can find a bond with 5%. Maybe you can. You know what I'm saying? You probably can. Like I say, the world is full of bonds, and you find one, but we could dive into that conversation, the differences. If you found one you definitely can find one that pays above 5%, but there's something called junk bonds as well. We'll talk about that later. So, but the point that I wanted to discuss bonds from is to point out that they are less risk and therefore less reward. And this has been for the whole history of mankind in investing. However, now you can invest in notes at places like Lending Club. And so what that is, you are a bond investor in this scenario. So let's say there is a building that costs $100 million, or I don't want to make it that big. Let's just say there's some company that needs a loan for something, and it's real estate related, so it is backed by real estate, and that's something that amount that they need to borrow is $10 million. All right, so through marketplace lenders, peer-to-peer lenders, such as Lending Club, you can invest in that loan that company needs for that $10 million project. But you say, well, shoot, man, I only got a couple G's. Well, no, I don't want to give that scenario. I want to say it this way. I want to say, remember we said stocks and bonds. So bonds is a part of your portfolio. So instead of saying the word bonds, I'm going to call it, instead of bonds, I'm just going to call it, damn it, that's escaping my mind right now, the term instead. All right, skip that. I'm going to come back to what the term is. So instead of a bond, this is just our fixed income. So our fixed income investing is the bonds. Bonds are fixed income assets, meaning we're not investing like a stock where you invest in a stock. You pay $10 for this share, and you hope that the share raises in value from $10 to $15, and then you made $5. Well, that's not how it works with a bond. In a bond, you invest, you buy $1,000. You don't buy it. You loan $1,000, and that $1,000 is going to be returned to you as principal, and you're going to get interest payments as compensation for lending that $1,000. That's what you do when you invest in bonds. So instead of a bond, I'm saying, instead of saying you need to be investing in stocks and bonds, I'm saying you need your stock market investing and your fixed income investing. So we're changing that word from bonds to fixed income. That's what bonds are. So for our fixed income investing, we could do better than investing in the bonds by investing with your self-directed IRA and using it invest in notes because we can make returns like 8%, 12%, 15%, and your money is only tied up for a year. So you making that as an annual return. And so versus you investing in a bond, you're gonna have your money tied up to maturity. But then it could be in the bond market and then you could sell it. But hey, you selling it, you saying you're at the whims of the interest rates, and that again, I would have to go into a whole finance conversation with you to explain the connection with the interest rates and the bond prices and how one go up, one go down. So that's a whole long conversation, but take my word for it, investing in notes is a better play in terms of the interest that you will receive on your investment. Again, I don't like to say one investment is better than another. It is different, but this type of investing in place of bonds as our fixed income asset strategy is going to make you more return. It's different risk reward trade-off, right? But I'm just hipping you to the game. That's a way to have your bond portfolio to a strategy to your bond portfolio strategy could be investing in notes within your self-directed IRA. All right, let's smash through this from here on. All right, private lending. Private money is another great way to obtain funding for your real estate deals. I've been mentioning that. So private lending is what is occurring when people use their self-directed IRA to lend you money. That's what's happening. Is private lending is occurring. And so that's what's been happening. That's when you hear the word private lenders, when you do your research, you go online and you understand, you're like, damn, it's private lenders out there giving people money. Because everybody has, or most people they start learning about real estate investing, and that you don't got the money. So we want to use other people's money. And so we hear about this fantasy thing that is, the fantasy is this. It's called 100% financing. And you're going to see it somewhere saying, oh yeah, we even have 100% financing. Well, understand, trust me. If you trust me at all, I'm your friend. Trust these words that I'm saying. That's bullshit. There is no such a thing as 100% financing. We can use everybody. We don't have to. There is ways that we don't have to come out of our pocket